Welcome everybody, and we'll try to have a little bit of fun and get through this quickly. My name is Chris Kimble of Kimble Charting Solutions. This is my 37th year in the business, and our goal is to produce actionable chart patterns, save you time with the research, improve your decision making, and what we want to call with our product is the power of the pattern. And as we all know, this pattern is all over in nature, from storms to flowers and plants. And I just kind of want to spend just a second here looking at how we're using some of this same patterns and in nature on the S&P 500 as an example. But I kind of want to just share just real quickly. This is the S&P 500, and we applied the Fibonacci to the 2007 highs, which are very important historically, and the 2009 lows. And then we looked at potential Fibonacci extension levels. And the first extension level off the 2007 high and 2009 low in the SPY was 210. And you'll see how it just kept bumping up against that while it was having a series of higher lows. And so we had a resistance level of the power of the pattern, something that we see in nature, all over the place. We had these rising lows, which essentially formed an ascending triangle. And today is a focus that when we see positive upward movements, one of our favorite patterns, during bull markets is the ascending triangle. And so we're going to highlight today and discuss that quite a bit. But the S&P used the top of the extension level at 210, hit it several times, broke above it, then came back down. And one of the ideal tests of an ascending triangle is to use old resistance as new support. And you can see that it did late last year, and then it took off to the upside. So today's focus is while we see this big broad pattern going on to the upside, we want to just talk about ascending triangles, how you can find them, measured moves, and many different positive things here. But just before we leave this slide, the Fibonacci 261 extension level on the SPY comes in just short of 300 at 297. So from a very long-term perspective, the Fibonacci extension level would say there's still some good room to the upside. So we want to look at how can we take advantage of potential higher markets and bullish ascending triangle patterns. So we want to just introduce this pattern. We know that it's been out there, but it's one of our favorites, and here it is. It's the bullish ascending triangle pattern. The topics that we're going to cover today are the introduction, the value and advantage of chart patterns. We're going to define and describe a bullish ascending triangle pattern. We're going to identify its key characteristics. We're going to break down several assets with this pattern. We're going to show you how you can measure the upside potential of the pattern, and then we're going to share numerous examples of bullish ascending triangles that are taking place. So a bullish ascending triangle defined, they're the most common. They take place during uptrends, and that's what we have in the S&P taking place, also known as a continuation pattern. So these are the two primary focuses. Again, we started off with the S&P. It's in this uptrend. And so we want to try to find these type of patterns that are taking place during an uptrend. So the common characteristics that we want to look for is the triangle, looks like this. But so here's the key thing: it must be an established uptrend. We need to have a series of higher lows taking place. We also must have a horizontal overhead resistance line with at least two different times that it has touched resistance. Another key characteristic is that the price should contract inside of the pattern, followed by an expansion on the breakout. And these patterns can take advantage also of the old resistance by breaking out and coming back and testing it as new support. So we're going to look at a bullish ascending triangle in Walmart that premium members took place. And as you look at this chart, do you see any bullish ascending triangle that's taking place? Well, here we're going to highlight it, and you can see that we're going to dig in a little bit deeper. Walmart had established an uptrend. That's one thing that we wanted to talk about. There's one of the key characteristics. It established a trend of higher lows. And you're going to see it also, it had at least two overhead resistance lines. And then we had a breakout to the upside. The price contracts inside this pattern, and then followed by an expansion after the breakout. Here's the narrowing of the pattern. Push to the upside, we'll apply a measured move, and we can see what Walmart did. And this all took place while retail was one of the hardest hit sectors. Huge declines were taking place all while Walmart was doing this. So a bullish ascending triangle we shared with our premium members was here. One of the things that we talked about was this higher move. We actually purchased it early in the triangle. We got a real nice advantage taking place. So here's an example of how that pattern really helped us out by owning Walmart. And then here was some examples of different retail stocks, and look how they did from a -2 to -33%, all while we picked up a 14% gain in Walmart during that time period. One final note on a target price to the upside. A target price can be measured by taking the widest distance from the base of the pattern to the top and applying it to the breakout. And it's just ironic how this can work in a really positive, way, everyone. Here's the ascending triangle breakout target price. So here's the measurement. The measurement suggested that you could add another $14 to Walmart on the breakout to roughly 76. And you can see that Walmart went right up to that level and stopped on a dime and then started retracing. So the breakout was essentially the distance between the 2011 July low and the 2012 February high. So ascending triangle target was shared with premium members, took advantage of it. We measured this, and then that's when we harvested and took some gains based upon the measurement of the ascending triangle. And that's one of the best aspects, everyone, is just how you can take these measured moves and look to know where you just want to walk away. Just say, hey, I think I'll harvest based upon this measured move. And there's not many bull market continuation patterns that can do this for you. And that's why we wanted to cover today this ascending triangle pattern. This is another one that we shared in Citi. Citi has gotten crushed, as we all know. And we noticed this is back in June. And so these are the same charts on the left and right, but you'll notice the small ascending triangle pattern is highlighted on the right. We picked up Citi based upon this, and you can see that it started to break out in June. Here's just a little update on that pattern. As of current, you can see that it's continued to push higher. You can see that it's really broke above and done really well. So we've continued to pull our stops up on this position. So here's an example of stock that's really gotten pounded. And one of the things that I find really interesting is Citigroup lost so much. As you can see, it was essentially because of some of the splits and readjustments of it, but essentially it was priced at $600 a share in 2007, and it got down to almost $10. So what intrigues me is that the 23% Fibonacci retracement level, which would be one of the smaller retracement levels of that huge decline, comes into play at the 137 level, and that's still almost 100% above current prices. So Citigroup has a long way to go just to recover one of its smallest fib retracement levels. So another example is a bullish ascending triangle in the Russell 2000. You can see this is something that we shared almost 2 months ago with our customers. And the idea of the measured move is the distance measured from low to high. We put this in the upper right, shared that it could add another 7% or $10 onto the price on the breakout. Oops, I'm very sorry about that. And here's a continuation. This is a current chart. On this, we've seen, see how we broke above, come back down and test it and pushed higher. Positive aspect on small caps, and they've been outproducing the larger caps of late. Here's another example of something that we shared earlier in the year on Triple D back in May. Here's another bullish ascending triangle with breakout to the upside. Here's another one in biotech and IBB. You can see the series of higher lows and really a long-term support line going back to 2011, a series of flat tops at 1. This was picked up sometime back, and it's continued to push higher. Here's an update on the pattern, and just to let you know that we've done well in this trade, and there's an unfilled weekly gap up here. So one of the things that we do for customers is try to make them aware of these type of situations, that a gap could be filled, and so as it's neared this gap, we've actually taken some profits off the table and pulling it up there. But this is an example that Once it started to break above that pattern, it just really rocketed up. As you can see, it was a huge gain. This is a weekly pattern. So that's a large weekly bar that took off to the upside. So IBB, for any of you that are in it, you can see that this is an unfilled gap that it's almost to fill. So we have pulled our stops up tight and harvested a little in the position. Here's an example of EFA that we have owned for several months. EFA had formed a bullish ascending triangle, and once the breakout was to take place, we've owned the position. And so the measured move calculated another 11% to the upside. We're adding about $6 onto that price. EFA's continued to do well. Here's another bullish ascending triangle pattern that we've been sharing and with our customers, which is the China ETF FXI. It also, you can see as it broke out here at 1, had a really large move on the breakout. A lot of people look for these patterns that once resistance is taken out, they hop on board. That's been a successful strategy by many for decades. And I just kind of wanted to make aware that there's an unfilled gap on FXI on a weekly basis up there at 2, which is around the $45 zone. So FXI has continued to push higher. We are long this position for a while, and we will be looking at raising stops and harvesting some monies as it approaches that unfilled gap. Here's another example of a bullish ascending triangle in XLV, which is the healthcare ETF, one of the the main sectors of the S&P 500. Again, this is XLV. Breakout at the horizontal resistance line, and the measured move on XLV was to add almost $10 to the price, or around 13%. You can see that there's a potential that XLV had formed an inverse head and shoulders, a bullish pattern. Some could even say that that's the neckline of that pattern. So if we would take a measured move of that, it would probably push even higher than the measured move of just the ascending triangle on the right part of the chart. But another real positive pattern. One of the things that we will continue to raise stops on this, we would not want to see it break back below 1 or the rising support line. If it would probably trigger our stop. Here's another one that's kind of a combination that you remember after the election of this past year, a lot of the talk was about the reflation theme. And then around March of this year, when that reflation theme really got a lot of traction and people were bragging about it, all of a sudden, one of our inflation indicators, which is the TIP divided by TLT, TIP/TLT ratio, it started heading south in March. And all of a sudden in the last, 45, 60 days, a lot of people said, oh, the reflation theme is over. And about the time that started being discussed a lot more in the media, lo and behold, copper starts moving higher. Base metals start moving higher. Freeport-McMoran, an S&P 500 stock that we happen to own. We don't show it in today's seminar, but we've owned it for about 65 days, and it's up 30% in that time period. Had a positive pattern for us. But so it's interesting how about the time that a lot of people in society were questioning that the reflation theme was dead, all of a sudden some of these assets have really perked up of late. This chart interests me for not only the ascending triangle pattern. This goes back, this is a long-term pattern going back to the 2008 highs, but you can see in the $89 level that IYM struggled or it peaked in 2008, peaked again at 2014, struggled for the first 6 months of this year back at that level. Then we've seen a breakout at 1. So you have a breakout here of a bullish ascending triangle and a breakout of resistance above horizontal highs that have been in place for the last 9 years. This is one that I wanted to bring up that's a potential bullish ascending triangle pattern, but it could be failing. And 2/3 of the time, bullish ascending triangles break to the upside. Well, there is a third to the flip side. So I kind of wanted to bring this up right now as the markets have been really hot to kind of show you an example of a potential failure of an ascending triangle pattern and what to watch for on that side. But this is the transports IYT, or the ETF IYT, and you can see that at that green line, we took the highs of earlier this year, and then as the IYT was rallying, it tried to push above and did get above that high by about 1 week, or it traded above that old high for 1 week. And then we've seen a series of the red bars on a weekly basis, it's had a couple of weeks lower. So transports are down almost 300 basis points as we're speaking during the day. The market was up a good bit more. But I posted this on the Twitter and on StockTwits today, just sharing that, you know, the bullish case would not want to see transports, because they're such a key part of our society. You wouldn't want to see support break at 2. And so that could be, I just want to show the flip side of how you can use these bullish patterns to help you manage other patterns that you have, and also get a good feel of the macro picture, you know, that's taking place. So I did this this morning. So I believe as we speak, IYT is actually trying to break down below that support at 2. And so that's why I say the bulls might be a little bit nervous if this support breaks after quite a good strong rally that we've seen of late. A couple of others we're going to go through of ascending triangle patterns that we're sharing with some people. This is CTERP on a weekly basis. You can see that it's trying to make a fresh breakout in the upper right. And one of the things we're going to do today, and Rick's going to talk about in a little bit, is I have more ascending triangle patterns than I can maybe share with you today or that you want to see, but we have quite a few more than was pretty much possibly allowed to work in today's webinar. But we're going to try to share, if you want to send, Rick will talk about this later, an email address. We want to keep updating you on these patterns that we've seen and the type of action that we're taking on these patterns. So later on, feel free if you'd like to join in, and you don't even have to become a member to do that, but by attending today's webinar, if you'd like to keep track of some of these patterns, and hey, Chris or Rick, how is this acting or doing, please feel free to reach out to us, and Rick will cover that later. But here's another long-term support line going back from 2012. So we almost have a 5-year rising support line. Horizontal highs taking place with a breakout just essentially above the $56 level. So another one that is almost a combination pattern, but this is a BITA on a weekly basis. And you can see in the blue here, we have the series of higher lows, and then we have the flat tops. And so what we're going to do is we've set a buy order or an alert on our system that if we have a breakout to the upside, we're going to be alerted to this, and we'll want to hop on board. You can see numerous times through the years, even going back to 2014, that essentially the $33 level was important on this stock. We also see falling resistance, which this is forming a pennant pattern. And as most of you know on this call, a pennant pattern is a pattern of compression and narrowing. They don't really give you as good of a tip off to whether it's a breakout or breakdown's going to take place. But what you do want to do is follow the breakout or breakdown of a pennant pattern. So right now, this pattern would suggest 2/3 odds of a breakout to the upside. If this takes place, we'll be alerted to this, and we'll alert you, any of you that are on this webinar that want to stay alert to that, and we'll also be sharing this with our members. Another one, that's been in the news lately is AMD. The tech stock has done really well. Just a couple of thoughts or observations on this pattern. It's in a really clean, steep rising channel, shaded in the green, but you'll notice a series of flat tops in the blue horizontal line, which forms its own ascending triangle. So we would be interested in this on a breakout. This is a weekly basis, and so you'll notice this week it has the potential to be a negative bearish wick taking place at horizontal resistance. So this is just another example to watch positive patterns like this. We set alerts, we share these patterns in advance with our customers, and when this if a breakout on a solid basis on a weekly close, if it could get above that level, we'd want to be an owner of this. So I wanted to share this with you because AMD has really been in the news, been I would suspect a big influencer on tech stocks, and the tech sector itself, I don't think would want to see a failure pattern by AMD up against this resistance. But again, bullish descending triangle pattern, our alerts are set that if it's a breakout to the upside, we would want to own that. So I'm going to finish just real quickly here in the interest of time, and I'm going to turn it over to Rick. Rick Bertino, and he's going to discuss some other things about Kimble charting solutions and tell us a little bit about it. Rick, are you there, and can you take over?
Renee, can you switch things over to me, please?
Yeah, I'll make you a presenter 1 minute.
Okay. Well, bear with me. I'm going to pull my version up here. Same thing we were just going over with Chris, and we'll get to that slide he was on. Okay. Well, welcome everybody. Again, thanks so much for joining. I'm going to kind of cover just the big picture about what we do. As you can see, Chris got right into the meat of things, and but I'll cover the bigger picture and what we deliver to our clients, and then how you can test drive the research for yourself, and I'll share the different types of research that we offer. But I thought I'd cover, at least initially, some of the things that we hear from our own customers who have come to us and reasons why they came to us, the things that they're struggling with. These are the things that we focus on trying to provide solutions for at Kimble Charting. So one, of course, is struggle just to identify major market turning points. We obviously haven't had a major one on the downside for some time, but it's still something that becomes of greater and greater importance as these markets continue higher. That's what our pattern analysis is all about, is trying to help people find potential turning points. Second guessing, lots of people that we talk to second guess their own research. It doesn't mean that the quality of their research isn't good. It's just that they're not confident at this point. And our type of research, I think, really helps fill the gap because it's visual, it's simple, it's concise, and it provides a perspective that oftentimes is an alternative to what is typically a lot of information, which we'll also talk about. Don't always have the confidence to pull the trigger. Again, we're trying to give some additional information to help provide that confidence. And in some cases, people are just looking for a quality technician. Maybe you've used other technicians, chart pattern specialists. They come in different names and forms, but Chris has been doing this for a long, long time. He's been in the business since 1980, and many have found him to be one of the top pros, and more than anything else, provide a simplicity to what he does, which also provides clarity and confidence as a result of it. People need help finding extreme support and resistance levels. There are different ways to do that. Chris looks at bigger picture patterns, typically weekly, even monthly, but finding those patterns and knowing where support is to take a position, or resistance where you might take some profits and move up stops. Again, things that people are challenged with, we provide these solutions for. Lots of guys folks do fundamental research. Nothing wrong with it. We have nothing against it, but it's difficult to try to find a timely entry or exit point. And that's where the pattern analysis comes into play in terms of what we try to provide. And an objective way to make investment decisions. Lots of news, lots of opinions out there, but how do you objectively make a decision? Again, the pattern analysis that we truly believe helps make things objective, takes the emotion out of the decision. So some of the things we try to specifically deliver is to identify these key market turning points and breakouts, as Chris shared many examples of, reduce the noise with charts that are clear, concise, and actionable. Every one of the charts that we try to provide is not just informational at the time you receive it. We really want it to be actionable. You get enough information every day, so why not just focus on what's actionable? That is one of our main objectives. Give you another set of eyes, searching you and alerting you to opportunities. That simply means lots of people we work with do their own charting. They may either use other chart research. So we can be just another set of eyes to alert you to opportunities, not the only one. An approach that really ultimately tries to provide and improve confidence to pull the trigger. I can't tell you how many people have shared the difficulty they've had. Maybe they've just made some bad decisions in the past and they're just having a real difficult time pulling the trigger. Research that simplifies that decision, I think, really changes that and improves the confidence they need to make the decision. Ultimately, what we really want to be for people is what we call our 28-second solution to investment research. That phrase, which was actually 28-second advantage, comes from a friend of Chris many years ago who had used Chris's research for some time and called him up one day and kind of coined the phrase 28-second advantage. And he used that phrase because he said, you know, Chris, I find that your research really helps me make a decision in that very little time. When I look at your charts, I know exactly what to do. I know what the pattern is, and in very little time, I know the action to take. And so that's the phrase that he had coined, and we liked it, so we use it. But at the end of the day, keeping things simple, short, to the point, giving you the ability to see a pattern and know quickly what to do is our main objective. We talked about the fact that there's just no shortage of information and opinions. Again, the pattern is nothing more than, when you look at a chart, its price and pattern represent a combination of beliefs of all the investors in that particular asset. So when you find the pattern, immediately, if you know what that pattern is, and our job is to educate you, find the patterns and educate you on what they are, you'll know what the action to take is in very little time. So if you do fundamental analysis, the point is this will help confirm that analysis. If you don't do fundamental analysis and you really need to save time, but you want to be able to make more effective investment decisions, then there's no more effective and shorter way to do it in terms from a time perspective than just looking at chart pattern analysis. So here's an example of the kind of communication that we deliver to our members. And we'll talk about those, the different types of research products that we deliver or produce for people. But this is an action alert that went to premium members recently on FCX. This is the extent of the commentary, here and here. We're not looking to write white papers, folks. There's lots of people who are willing to do that, and so if you want to read them, great. There's nothing wrong with that. Again, our job is to keep it short, sweet, and to the point, give you the main reasons why we're taking action on a particular asset, and of course, the pattern itself that we're looking to take action on. That is the extent of an email communication where we took action to buy Freeport recently. Again, clean, clear, and concise. This is an update on FCX where we took some profits. It broke out. Here, I'll go here. It broke out, came up to resistance, so we took some pocket change and moved up stops. Now, as a member, you know, you're going to make your own decisions. You might only move your stop up and not take profits here. You might do what we're suggesting. It's completely up to you. This is research for you to make your own independent decisions, not for us to hold your hand. But we are going to tell you what we're doing in any particular situation. So again, here's the action, very short, brief commentary with a chart, because we believe this really tells you everything. We almost don't need this, but it's part of our service, is what we want to do. And of course, people do want to know what Chris thinks specifically about a pattern and what he's doing. So we're going to share some commentary, but keep it brief, to the point. So how can you engage Kimble charting? Well, if you want to keep current on some of these bullish ascending triangle opportunities, we invite you to send us an email. This is one of many patterns. I hope it was obvious, but I want to be careful not to assume. This is not the only pattern we focus on. We focus on several different patterns. In fact, the Freeport macro and the FCX pattern was a falling wedge that it broke out of. But if you're interested in patterns like this, the ascending triangle pattern, we will put you on an update list that when we find that pattern, we'll send you an email with the action we're specifically sharing with our premium members, the exact same information. We'll do it for free. We'll do it for a period of time so you can get familiar with us. There's no obligation or any other information we need from you other than your name and your email to keep you abreast of those things. So that's one way to keep current if you'd like. And I'll get to another option for you in a second, but these are just a couple of comments from our own people who subscribe to the research, that it's simple, that it's clear, and people made money, they made profits from the trades. That's ultimately, at the end of the day, what we're trying to deliver. And since this guy shared what we're trying to deliver, we pass it along as a good example of some of the things that we're trying to help people to accomplish. Again, we're not trying to be the only research that people use. Hopefully it's one of the best, but at the end of the day, it may complement your other research, it may lead your other research, or confirm your other research. For Tom, you know, he looks at it as a confirm. So 2 types of research products we offer. Individual research products, global dashboard, metals, and our sector commodity. These are 3 different weekly research reports that come out. Now there are actionable ideas that we email for these 2. This is more big picture, 30,000 foot view type research. You can get these individually at $67 a month, or you can do a combo where essentially one of these is free. This is our weekly research. I'm here to answer any questions about that. I don't want to get to too much detail, but this is our weekly. Our premium is everything we produce. It's 11 asset classes of 50 different markets and sectors that we cover. Looking at, again, sectors, commodities, the metals, also some select individual stocks that Chris covers, some based on seasonality and other factors that he'll look for. Every day we're looking for opportunities. That doesn't mean that every day there's an opportunity. I'll show you an example of a list of some positions that we have shortly. When we get an alert, that's emailed to you. Some of you, if you know how to do it, can forward a text. We don't have text alerts currently, but we'll email them to you, and you can forward it to your phone from there. Trade alerts, of course, also come whenever we have updates to stops, or we're taking what we call pocket changer money off the table. Any special report, our monthly Connect series, which are really a summary of several different things we've been looking at over the past few weeks and new opportunities that we're looking for. Every month we hold that for our premium members. Again, all the weekly research reports, those 3 that I just shared with you, they're all included as part of premium membership, including our proprietary leading indicator and some other sentiment analysis that we do. And finally, a fact sheet. Now, we don't overlook this. This is something that helps us to know you better. So the more you're willing to communicate with us, the more we can help you make the most of the research, and that is what I'm here to do every day. So here's an example of the different types of positions. So you can see there are different sectors, many different types of assets that we cover. You know, whether you want to take a normal or half position size, that's completely up to you, but Chris will share what he's doing. You can see that when we've taken some off the table over time, like we have with financials, now we're down to 10%, 65% as a result of selling some FCX recently and so forth. So this is updated twice a week, again, sent to you by email. The next one is the same sheet, just bigger. It shows a couple different things. The long positions, this is the whole sheet that you get in PDF form. Long positions, any short positions, which we have none and have not had any need for recently. The closed positions. So each time we update this, any positions we have closed will show you or share with you in the bottom section. And then, of course, some details so that you can help manage your own positions, and hopefully you'll find this information effective to you. But all of this information is available to premium members, but also to metals and sector commodities. They get the same thing, just less because of different type of research. If you wanted to test drive, so earlier I talked about, we get your email, we'll update you on the ascending triangle patterns, but if you decide you wanted to test drive premium, we're going to do that for 30 days. Nothing you probably aren't familiar with, but it's a 30-day trial. You can switch to weekly, you can cancel altogether anytime, there's no strings attached, but it's a way for you to test drive the research. There's a link that Renee is going to send you in the chat box. You can use that link. It just makes it very easy to go directly to our website and to the checkout box. Now you can also open up and look at our product information and any information on premium or other research on the website. But this link will take you directly to start your free trial. Terms of the test trial, again, it's what I said before, 30 days, you can switch or cancel, there's no strings attached here, but it's a great way for you to at least get a test of all the research we offer. And at some point along the way, you might decide maybe it's more research than you needed. Well, then our weekly research, either the combo or individually, you might switch to. If you like premium and it's working for you, obviously you can continue with that. And then there's further savings, 20% and 30% with annual and our multi-year memberships. So if you need to contact us, here are our 2 numbers to do that. And again, our email. And I guess we have a couple minutes left, but I think that covers everything. Chris, is there anything I missed or anything you wanted to cover?
No, Rick, we really appreciate the time and the opportunity to speak with everyone today.